Well, good afternoon, everyone. Welcome to the webinar. We're going to give a few moments here for everyone to jump in and get started before we get started. Well, welcome everyone for joining us today. My name is Nathan Davis, and I'm an audit partner with Cape and Krause. We have exciting topic today with a special guest, and I'll introduce Norwood here in a minute. But we're going over church data, understanding key church financial metrics. And we are going to use the church financial health to do that here that we've worked on developing and have shared for many years to kind of talk through those things. And it'll be hopefully a very informative and exciting time for you guys to hear some of the key metrics and key uh, benchmarks and ratios. Today, like I said, I'm a partner with Cape and Krause. I've been with the firm for 10 years now, and I've been in the industry over 15 years and just honored to serve so many great churches and nonprofits and other ministry-focused organizations across the country. Joining me today is Norwood Davis, Chief Executive Officer at Wesleyan Investment Foundation. How you doing, Norwood?
I'm great, Nathan. Thanks for having me. So honored to be with you and just really appreciate the partnership over the years with Cape and Krause.
Yeah, absolutely. And Norwood, why don't you take a couple minutes just to introduce yourself? You've got such a great history and background here.
Sure. So I served as 17 years as the Chief Financial Officer at 12 Stone Church from 2005 to 2022. And along that time, we went from one campus to eight campuses and a $5 million budget to just over $35 million budget. And during that time, I partnered with Cape and Krause. They were our primary auditor, and we worked together and collaborated actually on the development of some of these church financial health indexes you'll see. Today, I'm the Chief Executive Officer of the Wesleyan Investment Foundation. We're the largest church loan fund in North America, have a little over $2.3 billion loan portfolio with a little over 1,400 church loans. In total, we serve about 2,900 churches through all of our products and services across 44 different denominations, associations, and networks, and in all 50 U.S. states and a couple of Canadian provinces. So excited to be with you and look forward to sharing about church financial metrics from my perspective.
Yeah, absolutely. Well, again, thanks for being with us, Norwood. And let's go ahead and get going here. Today's agenda, we've got six things here. We're going to just start with an overview of the Church Financial Health Index and what it is for those of you that may not be familiar with it. We have some cash flow reserve ratios in there that we're going to go through, some debt ratios, income and giving ratios, and then expense ratios. And we'll wrap it up at the end, leave some time for questions that are out there. We're going to start here with an overview of the Church Financial Health Index. As Norwood mentioned, this was developed many years ago, and Norwood certainly was on that group that initially helped kind of kick this thing off. But this Church Financial Health Index, it's a benchmarking and financial analysis tool that has been designed specifically for churches. So as this was being built, this was looked just for churches of what are the key metrics, what are the key ratios and key benchmarks that are a part of this that need to be included, and we want to make sure that it's something that is useful and serving of many people on staff, not just the CFOs, like Norwood was, but also the board, other members on staff, other interested parties. And so that was kind of the thought process when this was designed. It was made to help assess, your current financial health, looking at your church and where you're at today, just kind of thinking through the metrics and the different key indicators. We want to identify strengths and weaknesses, any potential warning signs that may be out there. That's what this is designed to do. It wants to look at it over a period of time, and so the more years that the church can put data into the CFHI, the better the financial trends and the tracking is going to be. It's really important to kind of see th 3, 5 year trends for a church, just to kind of see where are we going, where have we been, kind of help project where we may be in the next few years. It also allows you the opportunity to compare yourself against other similar churches. So, you have all of our clients in there, and that allows us to run some key ratios and metrics against other churches and other similar size and demographics at similar parts of the country, and those kinds of things to help make sure that you're seeing where you measure against other churches. And then finally, this is designed to, support your strategic and stewardship decisions with data rather than just intuition alone, right? So the more data that you can have as you make decisions and make changes and move the church forward on programs and ministries, um, it'll be helpful to have this as another data point to help to help you. Norwood, anything there you want to add or any thoughts that you have as you see all that?
No, absolutely. I mean, that was why we designed it, and it's certainly a great tool. And we'll talk a little bit later in the presentation about how to actually use these kinds of metrics, whether you use the Church Financial Health Index or use other analytical tools, and how you use those with your board and your staff, and even with some key donors. So it's important to be able to have a tool, whether it's this one or any other, to be able to benchmark and analyze.
Yeah, absolutely. And as we look at how the data is collected and how this tool is designed, first you either have an audit, review, or compile financial statements that go into the tool. So you obviously need the financial numbers that go in there. And then if you look at it, there's also going to be several non-financial data that's going in there. Things like giving units. So those are measured at 250 giving units, or $250 a year. So any household that gives $250 or more is considered a giving unit for the church. The other thing that's going to go in there is your full-time equivalents. So those are the number, obviously number of employees are going to be important to help kind of measure some of the non-financial data and can be able to compare yourself. Because one of the biggest comparison is going to be your number of giving units and then comparing you against churches that are in a range of what may be similar to yours. Or additionally, if you kind of want to look at where we're going in the next few years, looking at some larger giving unit churches, so that you can kind of see, okay, we may be at 1,500 giving units now, but we want to see where would it be if we grow to 2,000 or 2,500 or 3,000, because that's where we think we're going to be in the next 5 years, comparing yourself against some of those churches and some of their numbers as well. And so those are some of the important inputs into the Church Financial Health Index. And then some of the ratios that we're going to go through today, there's 21 ratios as part of the Church Financial Health Index. We're not going to go through all 21 today. We're going to go through some of the key ones, but they are in these four categories that you see on the screen. And those are there's 3 to 4 for each category. So we're going to just kind of highlight a couple of the key ones for each category that we're going to look at. And as Norwood said, we're going to kind of break down how he used these and some recommendations on how you can use these internally and with your board. And then the output of the Church Financial Health Index, there is a 2 year trend summary that you get as part of this, and then a 5 year trend summary that shows you 5 years with some benchmarking and some 25, 50, 70% markers with other churches that are in your demographic, and then a bar graphs for each of the ratios. And so also be able to use different ways to be able to explain this to your board and to look at different things here. We're going to show a couple of examples here as we kind of get into it. Here's the first one here. And as you can see at the top, in this sample, in this example here, you see the overview of some of the demographic information, and then you can see how it's broken down into four different areas, or three different areas here: the cash flow, the debt reserve, and the giving ratio ones. The measurements for each one of those. The different highlights there, you can see those are green, yellow, and red, just depending on the benchmarks in the far right column. So for each one of those over there, you've got a good, which would be anything that's in the green, a warning, and then those are going to be your yellow ones, and then action on the are going to be the red ones on the benchmark column. You have your average there as well, so you can see the other peers that are in that average. You can see what they are. And then, Norwood, as you look at this and think about just kind of an overview here of what we're going through, anything that sticks out to you here on the initial 5-year trend summary?
Yeah, one of the things that I loved about this report and how I used it really was just kind of monitoring what was happening over a long period of time, and where was the direction of different things. And you can see in this example report, some of the trends that this hypothetical church is experiencing, but it gives you, you can really kind of quickly see, they've got some kind of decline in giving units. You've got a little bit of decline in full-time equivalents over this period, and then the ratio of the giving units to staff as well. So this can, at a real high level, give you kind of a snapshot dashboard kind of picture. Really, if you're a church administrator or an XP, to just be able to kind of get a sense, a pulse of really, really what's happening. And then as you move down, obviously, you can see things like days operating cash and investments on hand to fund annual cash expenditures. One of the things I loved about this particular metric, at WIF, we get this question asked all the time: how much reserve should I have? And one of the things that I love about this is it gives you kind of a benchmark there that Cape and Krause has recommended, but also gives you an average of what other churches in your kind of category are doing. And so it gives you a sense of where you are as a church compared to that average of other churches and then that benchmark. So those are some of the great things that we look at. Obviously, moving down, that the debt ratios and measurements, the debt to contributions. This particular example doesn't have any, but it gives you a great benchmark there, and it's something that we look at pretty importantly. You get your debt coverage ratios that exist there, net income ratios, and then contributions per giving unit, which are really good. One of the ways that I used that was looking at how that compared to the average household income in our region where we were, and it's got that there at the bottom as well. So you can kind of get a really good sense of kind of how you're doing in your, not just how you're doing over time, but how you're doing relative to your peer churches and how you're doing relative to the context that you're in.
Yeah, and Norwood, as you think about when you were at 12 Stone and the growth that you had, how did you use this differently as you talked about, you started at 5 million and you went, all the way to 35 million.
Yeah.
Was there certain things in here that you kind of concentrated on or focused on to help that growth, or were there certain things that you were focused on maybe when you were smaller at 5 million that not as focused on as you kind of continue to grow and expand?
Yeah, well, for us in that season, as we grew, obviously we were heavy growth, which a lot of it, not all of it, but a lot of it was debt finance. So, we looked at that debt to contributions ratio pretty significantly, and there were seasons when we were we had a little yellow and red in that section, but it was just part of the growth cycle. But then obviously as we matured and consolidated, that came down. So a lot of it's looking as just in using that one as an example, where are you, what's your strategy and where are you going? There was a season where um, our days operating cash on hand was actually over 200 days cash on hand. And
Hmm.
we had a board member saying, why are you holding that much cash when your peers are only having 100 or 90? And well, part of it was a strategic decision. We were going to launch a number of campuses in the following year. And so we were building cash reserves to be able to fund those campus launches, fully fund them for that year ahead without a lot of stress and pressure or having to take on additional debt. So this is a great way to communicate strategy to other staff members, leadership team, or to your board.
And then, Nord, I'm going to go down here, the last section for the expenses. The question we get asked a lot is about, number 17 there, personnel to
Sure.
cash expenditures. Talk to me through how you use that at 12 Stone, or just kind of in general, any of these expense ratios that you really focused on or that you really enjoyed.
Yeah, and so in this example, obviously you got relatively high personnel to cash expenditures. And if you didn't see any debt, so they're able to do that. Typically at 12 Stone, we actually had a board mandate that we could spend no more than 40% on personnel expenses to total cash expenditure. So it was we had a hard cap ceiling kind of board policy. And so we were kind of managing that all the time, and it was something that we were focused on. And it forces you to lead differently and to structure your staff differently, and even how you build your volunteer corps and what kind of leadership. So, again, this is another way, this is just another example of how do you communicate the strategy of the church and what you're doing, but then really kind of to measure, see how you're doing relative to peers. Now, on this side of it, as the West End Investment Foundation, we typically will like to see for churches that are trying to take on debt, or high growth season, in that 35 to 45% personnel to total cash expenditures. That's ideal. Not every situation allows that, and it's not a hard and fast rule, but that's pretty healthy. If you get much above 45, 50, it's really hard to have capital to be able to grow, either generating your own capital through just operating cash flow, or any trying to be able to service any kind of long-term debt. Growth is really hard to fund when you've got significant personnel expenses. So that's a good one to measure, and particularly for those of you who, depending on how your leadership team is structured, if you're the one always kind of having to hold the line on personnel expenses, that's a good measure to kind of be able to measure and see what the benchmark is, as well as the average, and kind of watch your trends as well as an organization.
Excellent, excellent. Well, appreciate that, Nora. Let's jump in here. We're going to start to go through the next sections here. Just kind of go through some of these ratios in detail, and we'll kind of talk through what's involved in each one of these for each one of these sections. And Nora will just kind of talk us through some of the things that he looked for each one of these, and what he's looking for now with the Wesleyan Investment Foundation. The first one here is your days of operating cash and expenditures on hand to fund annual cash expenditures. And so just a couple things overview here is this is a 5-year trend, and you can see the church, their numbers are the blue bar lines here. So they range from 74 days up to 143 days here at the end. You can see the benchmark running through there. In this case, that is 90 days. And then the orange dotted line going through is the average for each of these years within the peer group for this example. And so this is just taking your operating cash and your investments at the end of the year, and taking your total expenses and trying to convert those to a cash basis. So it's backing out your depreciation, your amortization if you're doing that. It's also adding in your current debt principal that is due next year. And so just trying to get to your total cash expenditures during the year. And so you can see in this example, you would be at this church is at 143 days. Norwood, if you were the CFO at this church and you kind of saw this, what are some of the things that you would speak to or some of the things that you'd think about?
Yeah, well, one of the things, if I were at this church, I'd be looking at obviously the volatility in this and saying, man, there's a lot of changes here happening, and trying to understand what we're driving those changes, those shifts. I'd be looking, obviously something significant happened between 2023 and 2024. Either that was a, very large one-time gift, or perhaps, an asset was sold. And then I'd be looking even at the trend from 2024 to 2025. And, that's a pretty significant drop. And again, asking the questions, why, what's happening there? And then being look, obviously, is how the organization is doing relative to the benchmark, relative to the long running average there, and just being able to communicate to the other members of the leadership team as well as to the board. Hey, here's why these things are happening, why these changes are happening, and this is what this graph is telling you. For those of you who may be in the role and not don't have a financial background looking at numbers, that's the reality for most church board members. They're not financial specialists, they're not accountants, they're not finance guys, they're not bankers or lenders, and so oftentimes numbers on a page, it's difficult for them to discern trends. It's one of the things I love about being able to produce graphs like this. It's because it can be a great talking educational tool to be able to talk to non-financial parties about what the numbers are actually telling them.
Yeah, Nord, I've found in my church board presentations, 70% of the time is spent on the church financial health ratios. And, the other 30% is actually talking about the audit report
Yeah.
and those kinds of things. That this is where those non-trained traditional accountants, but business people kind of understand these things real well and can help, lean into this.
Yeah, absolutely. And when I did my reports, our rhythm at our board had monthly board meetings, but I reported quarterly on the financials. That was kind of our rhythm. And I would say, in my slide deck reporting to the board, I would provide them, the full, output of the audited financial reports, or even the interim financial, profit and loss statement, balance sheet, and cash flow statements. And they would have that in their board package. But my presentations were 80% graphs and charts,
Yeah.
really just to illustrate to non-financial managers what was actually happening. So this is a great illustration of how you can approach these kinds of tools to be able to communicate to your board.
The next one here is the liquidity ratio, Norwood, and this one here is your operating cash and the investments and accounts receivable over all of your current liabilities, deferred revenue, current debt, all those kinds of things. As you look at this, look at the benchmark there running through the middle. What are you thinking as you see this?
Well, again, you got some volatility here, which is consistent with what we saw on the other page. But there's always. I remember my first year accounting in my MBA program, and the accountant came in the very first day. He wrote on the chalkboard. I went to school back in the day when we actually had chalkboards. But anyway, he wrote "Cash is king" in all capital
Yeah.
letters, and cash is obviously your how you have liquidity. And we all, whether I went through as a church financial leader, I went through the Great Recession, went through COVID, went through some other kind of local things that were relevant to 12 Stone. But one of the things I learned is, in Ecclesiastes, it says, give portions to seven, yes, even to eight, because you don't know what disaster may befall the land. And so, there's a lot of prudence in making sure that you have reserves, you have liquidity, and this is just one other way to look at it to ensure that you got sufficient liquidity.
Yeah, absolutely, Norwood. And as at WIF in your role there, is there anything, do you guys use the liquidity ratios or any specific types of, cash ratios that you guys are looking at in addition to these that are on here?
Yeah, we primarily look at days cash on hand
Yeah,
as the ratio that we look at, and then a debt service coverage ratio to make sure that we're looking at, do they have sufficient cash flow to be able to service the debt? Those are the ones we primarily look at as it relates to cash and those. But we can look at all of them. They all kind of tie together in one way or the other.
sure, sure. Okay. Before we jump to the debt section, we have a question here, Norwood, I wanted to ask you.
Okay.
Um, we have one come in that says, how do you think about seasonality in giving and cash on hand? Like most churches, our cash dives during the summer months and builds up the rest of the year. Do you look at, if 90 days is the benchmark, are you comfortable going below that in the summer compared to the other parts of the year?
Yeah, I mean, a lot of it obviously would depend on the rhythm of the church and the giving history of the church. There is seasonality. I was blessed to have a great colleague alongside me named Anthony Ferrari, who's now the CFO at 12 Stone. He was a great, great analytical mind. And, one of the things that we built out over time was really kind of seasonal weekly forecasting tools to be able to manage that volatility. So even as we did our budgets, we didn't just say, "Hey, our annual budget was X, and therefore our monthly budget was X divided by 12." We
Sure.
would look at our history and look at our expense history, look at our giving history, and we would try and match up. And we refined it iteratively, but we'd match it up quarter to quarter, month to month, to be able to kind of manage some of that seasonality. Um, Again, if your seasonality and you allow yourself to dip down to, 60 days cash on hand, and then it happens the next COVID hits or the next recession hits, then you've got an issue. Or even if a key, your lead pastor or something happens with your lead pastor, even if it's one of our church clients had it wasn't a moral failure, it was just a health issue, and the senior pastor had to step aside, and that creates its own volatility. So you got to be prepared for things that are outside of your control, and be ready to address them. So
Excellent. Yeah, great answer. I love that. One other one here, Norwood. In your experience, at 12 Stone, was there any certain type of financial reporting that was provided without request of the church body? And how frequently did you guys, report to your church and your body as a whole?
great question. In our context, we were elder governed, staff led, and we would have but in our culture, we had in our uh, denomination, we would have an annual business meeting. And so annually, we would provide the audited financial statements to the membership. And then we would also provide an audited financial statement to anyone, that was a member contributor connected to 12 Stone. We would provide that audited financial statement. We didn't provide interim financial statements along the way, but we would provide the audited financial statements, and we'd make ourselves available to ask any questions. In that annual business meeting, we would also entertain questions. And in that, I would do a verbal report to the congregation or to the membership that was broader than just what was in the audited financial statements. I would talk some about the strategy and what we're seeing and go into some deeper detail, but kind of the bulk of it, we keyed off of our audited financial statements.
Okay. Excellent. Excellent. We get that question all the time. I don't know if you do it now with, but that's a question I seem to answer once a month is what are most churches doing? So
Yeah.
I saw that come in. I thought that'd be a great thing just to talk through here.
Yeah, and we see that, a lot of different, there's depending on the size of the church,
Yeah,
depending on the ecclesiastical structure of the church. Honestly, a lot of it has to do even with the tenure of how long has the senior pastor been there. The
yeah, yeah,
longer he or she has been there, the more trust there is, and seems to be the less questions there are. But so,
yeah,
it just depends on a lot of history, and I don't know that there's a right answer other than to have, a very thoughtful, intentional approach to it and stick to it, and that's what you do.
yeah, yeah. Well, let's jump to the debt ratios here. So the first one we're going to look at is debt to contributions without donor restrictions. And this formula here is pretty simple. It's your total debt over your contributions without donor restrictions. And Norwood, I know you have a lot of thoughts when it comes to debt, especially now in your role. So tell me what you think as you see this, and what are some of just overview thoughts here?
Yeah, so at WIF, we will lend up to three times this metric, and I say up to. It depends on a lot of different things. It's not just an absolute. It depends on loan to value and debt service coverage and other things. But
Hmm.
we would say that for a church to be healthy, um, and without really putting a lot of pressure on the leadership team, you need to be three or lower.
Yeah,
Um, there are circumstances and situations when you can go above three, but they're very limited and very short duration. You can't live like that. You just end up, you're understaffed, under resourced. You can't be generous in the community. You can't respond to community needs. So this is one that we look at pretty significantly, and obviously the lower the better. And we actually we celebrate when churches are pay off their debt, and we're excited to be able to move that capital and help the next church along the way.
yeah. And in this example we're seeing here, this trend is obviously a good trend, for this church as they continue to be paying down their debt, and that continues as we look at the next one here. Debt per giving unit. Obviously, Norwood, in our example here, this church is doing a great job in paying down their debt. Anything that you would see, specific to this example?
Yeah, well, obviously it's going down, which is good, and that can either be because the debt's going down or the giving units are going up.
Contributions, yeah, yeah,
So
yeah,
that it could be either one. We typically for a new debt we typically look at $5,000 or lower per giving unit. Um, However, I would say that's very sensitive to the area of the country and the
sure,
household
sure,
uh, average household income. It looks very different in rural Indiana than it does, in the Dallas Fort Worth area.
yeah, yeah,
So it's this is one where I think you really got to be careful of looking at the average or the benchmark, because it context matters a lot. I think the bigger question is how you as a church are doing over time with this one. Is your debt per giving unit going up, which is not good, or is it going down, which is good? And so that's really more the focus here.
yeah. And I don't have the debt coverage ratio as one of these that are up here, Norwood, but do you kind of want to just take a minute and talk about that since that's one of the key things that you like to measure as well now?
Yeah, so the debt service coverage ratio just typically looks at how much free cash flow. So it would take a look at your audited financial statements and then back out your amortization, depreciation, and then just in any other kind of non-recurring, significant events on either revenue or expenses, and just look at, do you have enough to be able to service the debt? Obviously, you need to have at least 1.0. So if your debt service requirement is $100 a month, do you have $100 a month of free cash flow? That would be a ratio of 1.0. In an ideal scenario, we like to see 1.1 or greater, just to
Okay.
have some margin there. But 1.0 is kind of necessary just to make things work.
Yeah. Okay.
If not, that means the church is going to, when they take on debt, right out the gate, they're going to be having to make decisions to cut other expenses.
Yeah. Yeah. Makes sense. All right. Well, let's jump to the income and the giving ratios here. And this first one here is the net income ratio, Norwood, and this is your change in your net assets without donor restrictions. So only without restrictions divided by your revenue without donor restrictions. We always a lot of times in these ratios we're trying to carve out the restricted gifts.
Sure.
So just talk me through, as you see this, you see where the benchmark is and where this church is. Talk me through what you're seeing here initially off the top.
Yeah, well, what we're seeing, obviously, again, you're seeing some volatility here, significantly doubling, the net income relative to the overall giving. So obviously, it's a profitable church. This would show up as cash from operations on your cash flow statement, and you're probably 39% is probably way too high. You need to look at,
Hmm.
putting some of that money to work in ministry or, again, unless there's some kind of strategy where you're trying to build cash for, a future strategic initiative or something else. But, again, obviously, anything positive is good. But in that 10 to 20% range is, um, seems to be pretty normal.
Yeah. And if you were in this situation here, did you talk about this with you'll probably go through this with your senior pastor and XP and everything. If you brought this to the board, I assume that you would want to have some sort of plan as to what we're going to do in this
Oh,
scenario with
absolutely.
our cash. Why do we have this much? What are we going to do? Between yourself and the senior pastor, kind of having an idea of, because that question is going to be coming, right?
Absolutely. It's going to be coming. And I would, if you had these kinds of numbers, you'd want to be synced up with your senior pastor before you go into that board
Yeah.
meeting, making
Yeah.
sure you've got a shared answer, shared assumptions about that. But yeah, for sure.
And how
Um,
often internally did you go through these types of ratios or just your own internal ratios with the senior pastor and XP, the leadership team of the church? How often did you guys, go through ratios, or was it more annually with the board?
Yeah, great question. So the way we were structured, we had the senior pastor, we had myself over the business side of the church, and we had an XP over the ministry side of the church, Dan Ryland. And Dan and I were reviewing this stuff every month. I mean, we were calibrating, make sure that we're in alignment, what we're seeing, and that kind of stuff. The senior pastor would get the reports monthly, and he had a question. I would answer it, but I would typically brief him before the quarterly board meetings that we would go in, and then obviously he and I spoke a lot about capital decisions. He kind of how we were structured. Dan Ryland, the XP, and I really looked at most of the OpEx kind of expenses, ministry expenses. And then the senior pastor and I would connect on the big capital decisions we were making
Sure.
and how we were deploying capital.
Yeah. Okay. Awesome. I'm going to jump to the next one here in the income and giving section. This is the total contributions per giving unit, and this again, this is total contributions. We do back out large one-time gifts, which I think and Norwood, you can speak to this too. I think that's important to understand in your church. What gifts did we get this year that are you know from a bequest from a will or estate or large one-time
Yeah,
things from maybe somebody who sold a business that's not going to happen every year um, compared to those that are large gifts, but they may be reoccurring just because that's, some of the donors that we have. And we divide that by total giving units. But just your, opening thoughts on some of those comments, Norwood, and what you're seeing here.
absolutely. Again, this is just about knowing your congregation and who it is. So, speaking specifically to those recurring gifts, we would back out, estates or, significant liquidity events. But in our context, where we were in a suburb of Atlanta, we had a number of people who, were real estate developers, or, involved in private equity. And, the way they'd get a big deal once or twice a year or sometimes once every 2 years, and they would tithe on it, and it would be a big check, and we just knew kind of the rhythms And so we would keep those included and then back out the, big kind of liquidity event when somebody sold a business or, was a beneficiary of an estate or that kind of stuff. So we would look at it and have some intelligence about it, about where those big gifts were coming from and who they were coming from and what was the historic pattern. But then also, we looked at this very much relative to the context that we were in. We looked at average household income and how did this number compare to the average household income and a tithe on the average household income. So that was really kind of how we looked at it. We really didn't worry too much about the benchmark or even how we compared against other churches. We really looked at it how we compared against, a tithe on the average household income in the community that we served, and then what our trends were over time.
Okay, excellent. And as you look here, if we're not looking at the benchmark and we're not looking at the average here, the thing that sticks out to me is as we saw earlier, either contributions are going up significantly,
Yeah,
or they're getting more per donor.
yeah,
One of the two, they're getting some larger gifts per donor. Something's happening. It's kind of what I'm seeing.
yeah. Or yes, or you've had some small giving units drop off.
Sure, on
And
the back
so,
end.
the your giving's getting more concentrated, which is another thing to look at. It's not on this report, but a concentration of how much of your giving is in the top 20 donors, the top 10%, the top 20%. Those are you got to be sensitive to those things.
Yeah. And as you say that, Norwood, is there anything that you can share from your time as to what you guys normally saw as your percentage of, our top 10% would give X amount of our total contributions, top 25? And did you look at bands like that, top 25, your
We
middle,
did,
your middle
and
group and then your bottom?
yeah, we kind of track the top. It changed as we grew in size. But we looked at the top 20, and then by the time I was late, we were kind of tracking the top 100. And then we would follow the top 10% and the top 20% and just kind of know kind of what, but I would say very much the Pareto principle, the 80-20 rule.
Yeah.
Someone who very much applies. I mean, 80% or more of the giving in the church is going to come from 20% or less of the people. It's just the way the world works.
Yeah.
You'd like to think it was different, but it's not.
Yeah. I'm gonna pause here, Norwood. There's a couple of
Yeah,
questions that came in that
right.
I'm gonna answer here. One was about total giving units being calculated annually, or do we calculate them on a rolling 12-month? When we put these numbers in, we calculate the total giving units from the most recent 12-month audited report. So we look at your donor listing and we see how many giving units were on that donor listing. And we do that over the most recent fiscal year, whether that was an audit or a review. And then we also do that for we just look at anybody who's given their households given over $250. So those are the couple of answers to some questions on there. And then one interesting one here for you, Norwood. I'm just going to read this one here. Do you look at these numbers as a church as a whole, or do you ever look at them by campus for those of you that are multi-site, or maybe a combination of both? Like just kind of talk through all 12 Stone, or did you ever try and break these out by campus?
Yeah, we actually did. We looked at giving by campus pretty significantly. We looked at expenses by campus. We did not look at debt by campus. It wasn't how we didn't want our campus pastors managing that. So we looked, but we did look at all the expense ratios and the giving ratios by campus.
Was
Uh,
there, when you did all that, was there any, what did you kind of, some of the insights that you saw or some things that you saw during your time that you think would be helpful to this group?
with regard to
With
campuses,
regards to looking at it by campus, what was some of the benefits of doing it that way?
yeah, well, I mean, depending on where your campuses are, again, they're different. They're going to be spread across different geographies, different context. At 12 Stone, we had some campuses in really urban areas. We had some in suburban areas, and we had some in rural areas. And so, trying to again, just understand and give context to where those were and what the differences were. We had pretty significant differences in the campus context on the expenses. So you couldn't, particularly when it came to your building operating expenses, I can't hold um, a campus that we was a 15-year-old church that we acquired and then renovated to the same standard that I for a campus that we just built, Greenfield on, some OpEx stuff. So anyway, yeah. I
So can I
see
just
a
under
question in here, Nathan.
go ahead.
It's about what does 40% contribution to staff ratio mean, and what elements does personnel contain, benefits, et cetera. How we did it, and I think how the uh, Church Financial Health Index is, you just take everything that you spend on personnel, salaries, benefit, workers' comp insurance, all of those kinds of, if you have any short-term disability insurance or long-term disability, everything that your 403B contributions, and you divide that by your total cash expenses. So if your total cash expenses are $1 million, 40% would be 400,000, that you can't spend any more than 400,000 on personnel. So that's how that would be. But yes, we included benefits, everything associated with personnel.
Yeah, that's a great lead to this next slide here because that's what this next one is trying to measure. And so, yeah, I mean, Norwood, as you think about that, I mean, it was this is designed to include both internal and outsourced employees, because if you think about the world today that we're in, people continue to outsource more different functions of the church. And so, if you're holding 40%, but you're not including your outsourced accounting that you're using, or your outsourced HR or outsourced IT, you're really not capturing your total salaries and benefits.
Yeah, you're not. And we included 1099, or outsourced people, whether they were worship people or whether they were. We outsourced our IT and we outsourced our facility management, and we included those in those analyses as well.
And so when you look at it from your perspective now at WIF, and you're looking for 40 to 45, I assume you're including those outsourced 1099 employees as well as part of that when you're doing your evaluation.
Yeah, absolutely. Yeah.
Yeah. Okay. Um, I'm going to go ahead and hit our next one here, personnel to cash expenditures. And so if you look here, anything as you see this ratio, Norwood, anything that you sticks out to you here for this church?
It's relatively stable. So, um, it's going as, I guess, as you would expect it to go.
Yeah, yeah. Well, good. Our last one here is contributions and expenses per accounting FTE. And in my role, I get my clients asking me all the time, how is my accounting department enough people? They always feel like they don't have enough people in their accounting department. They need more. And so this, I think, is a great ratio just to kind of give them an idea of where their peers are at. You want to talk about this, Norwood, and some of the things that you saw and you use this for?
Yeah, we used that same thing. Just, it was kind of a staffing, and I don't know if y'all still have it, but I think at one point there were IT uh, or IT measures too, per IT FTE, based on
Hmm.
the number of other FTEs. And so we were always looking at this to say, make sure we had the right ratio of people. And it's it's something to manage and to watch. And obviously, technology changes these kinds of ratios significantly depending on how much of your processes are manual versus how many are automated. And that's even changing. We're seeing even some trends right now, things that are happening with AI, and some other tools that are coming on the market, both on the donor management side, like with companies like Overflow, as well as on the expense management side. So we're seeing um, these measures you're able to process more contributions per accounting FTE, and you're able to process more expenses per accounting FTE than you were 5 years ago or 10 years ago. Absolutely.
Yeah. Yeah.
I saw one of the questions was, do you include investment portfolios that could be liquidated in those various ratios regard to liquidity? Some of it would depend on, in terms of us and what we're looking at as a lender, is how liquid are those?
Sure.
Are those are those purely marketable securities on stock exchanges, or or they're tied up in some kind of alternative investment or something that's not easily liquidated. So a lot of it would depend on that.
Yeah. Well, our next slide here, as we move past some of the details of the ratios here, Norwood, are just, how do you use the CFHI in three different key areas here? I'll just kind of let you talk through how you did this and how you're doing it now.
Yeah, so when I was there, I used these charts and graphs and reports really to educate the board. We had board members, most of whom were not financial leaders and didn't have a finance background. And so I used it really to explain what the key metrics were. They would have the reference there over time of how we've done. They would have the average of our peers. They would have the benchmark. And then I would explain those key metrics. And then, if we had some significant variance, either from the average or from the benchmark, I would explain why we had that variance. And then used it to help monitor trends, point them back to what we had done. And again, really try and communicate to non-financial leaders. And then as we led staff, we would measure against the benchmarks, and we would monitor trends. One of the things we didn't talk about it, but in the detail of those, in that there was a place where you kind of measured salaries, and per FTE, and then you looked at benefits per FTE, and then you look at total comp per FTE. One of the things that when we implemented this, started looking at this, we found that our benefits per FTE, because some of our denominational legacy thing, our benefits per FTE were actually significantly higher than other churches our size and other multi-campus churches. But our salaries were lower and the total comp was just about right. Well, so we started looking, particularly as we were hiring younger people, and our benefits package was kind of heavily loaded to a retirement plan, given the history of the church. We started to change up some of those relationships between salaries versus benefits, really to be more competitive. So again, that was another way we used this tool to kind of get some insights into where we were relative to the market. So that was really helpful. As I
Did you
mentioned,
communicate some of that to your younger staff, like as you were talking through with them, and I mean,
oh,
just kind of communicate
absolutely.
what you guys are seeing out there?
Well, absolutely, we did. We did it in a big, because we made some pretty big shifts in both health insurance and in the retirement plan. We had an all staff meeting, explained why, and then one of the things that we gave each person as a tool was we gave them a total comp statement where we had a 1 page list. Here's your salary. Here's the value of your benefits. Here's your total compensation. Just making sure that people understood what kind of investment the church was making in them and their career and their family. So we absolutely did that. Um, and then finally, if you're a church that is looking at a major capital decision, these tools can help you prepare for a loan, debt to income, debt to cash on hand, debt to attendee, and debt service coverage ratio again. It just helps you prepare for major capital decisions. It helps you even if you're not going to borrow money, if you're going to use cash or have a capital campaign, it helps you prepare for those and know where you are against that. One thing I meant to say on the lead staff that I forgot, measure against benchmarks. As I mentioned, we outsource both our IT spend and our facility management. And I used the IT metrics. I think it's a spend per FTE that's in the financial health index, and then a dollars per square foot of
Yeah.
operating expense for things like utilities, insurance, landscaping, that kind of stuff. Well, I used those metrics and those benchmarks to manage those vendors and that were providing those services. And we even had those referenced in the contracts that we had with them. So it became a pretty powerful tool to be able to tell our vendors, hey, look, this is where we should be, and here's why. And so it really became a helpful tool.
Well, Norwood, as we close down here, finish up, wrap up our time here. Um, you know, is there any last? Still have some questions in the chat. If we don't get to anybody's here, we'll make sure and answer them offline. But any last closing thoughts that you'd like to share with the group here?
Yeah, well, I know there's a lot that's going on in the world today, and I, you know, your role is an important one in the church, and I just want to affirm that oftentimes it's not a very a celebrated role, and it's certainly not always a prominent role. And sometimes when it is a prominent role, it's for all the wrong reasons. But just know that you're celebrating, you're important, and that you're doing a great service for the kingdom. So we look forward to being able to serve you, and I know you've got some great resources there. So
Yeah, that's a great way to end our time here, Norwood. Thank you for that. And there is Norwood and I's email address. If anybody has any follow-up questions or anything that they'd like to know more about, please feel free to reach out to either of us. We'd be happy to have a conversation with you. And if you don't, if we didn't get to your question in the chat, we'll make sure and get to that, follow up with you individually. But we want to just thank everyone for attending today and appreciate everyone's time and appreciate Norwood for joining us. It's been a real pleasure and honor, Norwood.
great, thanks, Dave, Nathan. Appreciate it, and
All right.
honored to be a part of it. Thank you for including me.
All right. Well, thank you, everyone. Enjoy the rest of your day.
Thank you.